Are you ready for some free money? What's up, everybody? Welcome aboard to Bubba's Bottom Line. It is Sunday, October. What the hell is it? October the 27th. And of course, we've got a big week in front of us following a big week last week. And we are here with Bubba's Bottom Line. And of course, last week we had another dull market, and we'll talk about that when we get to markets. But of course, the dull grind continues. No interest, nobody cares. And it doesn't matter, okay? But, of course, this week you've got the Fed on Wednesday, and what are they going to do? Are they going to cut 25? Are they going to cut 50? Are they going to do nothing? Again, obviously, by the economic data, they should do nothing, okay? But, of course, we know that there's a lot of influence, and, of course, the other problems is what's going on globally, which is a problem, okay? The spread between other people's rates and our rates is too far off, but because the global economy is in that recession and maybe going into depression, and of course, we, as I've said, in my opinion, are in the very early stages of that recession. And we'll see how it plays out. I think it's interesting that, of course, instead of trying to grow your way out of recessions and fix your way out of recessions, we seem to be of the school of let the Fed print some more money. Okay, let's give away that free money. Let's not worry about the ramifications 5, 10, 15, 20 years from now. Let's just continue to do the same stupid thing over and over again. And what we'll see here is, if you go back to a little bit of history, 1998, the markets were obviously, the NASDAQ bubble were soaring, and there was a little bit of an issue. And of course, the Fed did cut rates to try to stave off that wonderful the recession that was going to happen. And of course, they were able to do so until when? Until 2000, 2001. And it then took the markets, especially the NASDAQ, 10 years to recover from the beating. So wouldn't it be easier to just rip that Band-Aid right off? When it happens, instead of continuing to try to manipulate around. Okay. To me, it makes absolutely no sense that we continue to try to disguise it, play around with it, try to prevent it, because what do we know? You're never going to prevent a recession. They're going to happen. They happen. They're part of a natural economic cycle. But, what really happens through a recession that you allow to happen naturally is you wipe out all the bad, all the weak hands, and you start afresh. But again, who am I? Just a guy making a comment here. But quite frankly, it's ridiculous. I'm tired of hearing about it. And, again, they're going to do what they're going to do. I have no say-so. We obviously have given up much of our free market system. And that's what you're really seeing as it continues to roll on. And, of course, that then takes us into the shadow banking system. As you know, I'm not a big fan of the banks in general. I do not understand why we constantly bail them out, okay? And I have no proof. This is 100% opinion only, but I would bet a sizable amount of money that the amount that the banks are supposed to have in reserve is not there, okay? But we go to the shadow banking system, which is some of the third-party proprietary outside lenders, the ones who get those usury rates, who get a little more rate, and of course, there's some trouble in River City there too, or trouble in the shadow world there as well. And we know, which we have talked about here often, is that many of these notes that are causing some of the issues in the shadow banking system have now, the banks have bought many of those notes. So, they're buying what we would call bad paper. And of course, they're packaging them once again. And once again, they're selling them. They're making these wonderful programs, very similar to they've always done. And you can change the name, you can change the look, you can do whatever you want. At the end of the day, it's the same thing. You're trying to put together a package to have those buy. You put bonds out on them, or you put on some investment vehicles, and of course you get the funds to buy them. You get everything's hunky dory until it's not, and then you get the next meltdown. And of course, this all ties in to the whole free money system, because again, if banks had to stand alone and actually survive, then we wouldn't have so many of these major banks. And of course, there's so much unfairness in the system because the small bank doesn't have a chance. And in my opinion, for most, the small regional bank is the most important, because if you're a farmer, if you're a small business, you need that small banking relationship, okay? Not the conglomerate banks, which is what we are going to be. And I believe the number is no bank can have more than 11% of the market. I believe that's the number. I'm not sure. I'm not 100% sure. But again, that means that at some day we will have 9 banks throughout the world, throughout the country, okay, and a few straggled others. Again, because they can beat the regulations, because of everything that's not good. Everything that isn't good for any system, they seem to be able to get away with it without issue. Again, I don't get it, but again, that's just another thing that I don't get. And of course, mortgage rates now have risen to higher levels. And again, it's not like they're big, right? I mean, so if you pay 3 7/8, 4 1/8, is it really that big of a deal over the big scheme? But you are seeing a slowing in housing. They keep talking about the inventory that's not there. Well, I think I see a real slowing, because of course this market is based on, it really comes down to money. As we've talked about, we are a by the month society as just a general rule. So how much is it by the month? Can I afford it? Is my pay enough? And of course, they buy. Okay, the same as we have with car loans and things like that. It's always how much is it by the month, not how much is it going to cost me. What's my obligation for the long term? How much is it tomorrow? And that does create many issues, which will eventually all issues rear their ugly head, because you cannot continue to kick the can down the road. You cannot continue to ignore some of the problems that are showing themselves. At some point, they must be addressed. We know that our people do not address them. We know that they hide, and they continue to try to figure out the ways to manipulate and to try to get around what real issues are. But at the end of the day, who end up paying the tab? You got it. You and me, baby. We get to pay the tab for all their nonsense, which, again, if they would let it just free play, then it would be a lot quicker, be a lot faster, a lot healthier, a lot better. And of course, we would come out a lot better. And they wouldn't have all their crappy deals that they make on the side. So we'll see what happens there. And we've seen these record highs have not really brought in, the race to the records have really not brought in a lot of new money. Now, of course, we always hear that there's new money on the sidelines. And let's clear that statement up. There is always new money on the sidelines. I don't care how much volume is in. I don't care what's going on. There is always new money to be brought in from the sidelines. But when you then look at the picture today and you understand that we are over-margined, margin debt for equities is at record highs. You've got everybody in right now that wants to be in. You have forced every hand to be in the market. So we don't really have a lot of trading market right now. We have a market that basically grinds higher. But at the end, the traders are not willing to step out and make this big shot. And that doesn't mean, again, I'm not saying we're not going higher. I'm not saying anything. I'm just saying that these are reasons why we have these issues. And you can't ignore the fact that we have, when margin debt is at record highs, when every fund is in the equity markets, when you see bonds doing what they're doing and no rates, you know that all the money has been put in. And how much more is there? But of course, as we say, there is always money on the sidelines. There's always more ready to come in, and it will. And again, that might signify the final blow off to the upside. We'll see. Again, we're not predicting one way or the other. We're just saying, what is actually going on, and we see China, their industrial production has fallen, our industrial profits have fallen. Okay, do we really think that China is not struggling because of these trade wars? We are not in trouble because of the trade wars, except for our exporting. But anything we import from China, again, they have reduced the value of their currency enough to allow our dollar to overcome any amount of the tariffs. So it has not had, but I guarantee you will start to see higher prices because the trade wars. Now I know some of the industries might have been slightly affected, but I think more of it's bunk. I think more of it is the political news and the lobbyists that are worried that they're not going to get theirs anymore. And I think that really comes into what the bigger problem is. And again, I can't tell you how sick I am of all of this, including the impeachment talk and including the Joe Biden talk, all of it. I mean, I wish it would just all go away. Okay, it's to a point where we know that Joe Biden did things that weren't right. Okay, but again, you can go back in history and find a lot of presidents, a lot of people in the system have done things that are not right. It's amazing that there isn't more that have not gone to jail. But at the end of it, I mean, does it affect your day-to-day life? And the answer should be no. What really should affect your life is to work hard and bring in more money, get a job, and do your thing, okay? And let the system take care of itself. But of course, we seem to have a big issue with that. And of course, the media can continue to pound away on these. And again, quite frankly, I'm sick of hearing it, and you won't hear about it anymore from me, okay? I've had my fill of all of it. Everybody kind of knows. If you've watched me before, you know what my stance is. But at the end, I'm sick of hearing all the crap, because I know that Joe Biden helped Hunter Biden. I know that they had some, but this was news long ago, okay? And of course, President Obama let it slide by, and it doesn't matter, okay? It is what it is. The whole system comes down, which is what the biggest problem right now is. The whole system comes down to all the special favors that have been done over the years and all the things that get done behind closed doors that end up costing and screwing the American public. That is the bigger problem, and that is what needs to be resolved on either. I don't care what side of the aisle you sit on, okay? At the end of the day, they both do it together. And I assure you that half the time when they make some of these deals, they're sitting in a room somewhere with a bottle of scotch and a cigar and saying, hey, how are we going to stick it to the American people today? Because we've got to finance and fund this thing through taxes, through something. So we've got to solve it by giving away all this and making sure that the average American pays for it. And I think that, again, to me, is the crux. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out of here for a break, and we'll be back with more after the break. What's up, all? Yesterday did a great hedging webinar, and this will be the last hedging class that we're going to have. Of course, we'll continue to do the reviews, but if you would like to get your opportunity to learn how to hedge your portfolio and be one of the ones that sends me a happy email every time the markets go down and know that you're protected, you can get a copy of that recording. All you do is send me an email at bub@bubbatrading.com. I'll send you a copy of the recording. In the meantime, again, if you're not hedged, hey, good for you. Don't puke the next time they get creamed. That's my only warning to all of you. If you're not hedged, don't panic. Because, again, you're going to have the chance to panic again, whether it be tomorrow or whether it be a year from now. At some point, you're going to have that opportunity. I recommend you get hedged, but hey, I'm just a guy. In the meantime, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line with, of course, yours truly. Welcome back to Bubba's Bottom Line. Top Bubba Horowitz with you. And of course, we have our markets. And, again, markets were, fairly strong last week. Once again, you have the continuation of what we'll call the dull grind, the slow grind higher. And there's nothing wrong with that. This is typical of a market that wants to go higher. It continues to grind and grind. You do not get wild swinging days. And if you've ever taken the time to look at a chart, if you're a technical person, you have obviously, but if you haven't, what you really want to go back and look at for yourself is to see how we go from days that are wide to days that are very narrow. When they're very narrow, it typically signifies, usually that happens more in an up market than a down market, okay, because there's less volatility. And it signifies usually that there's going to be a grind that's going to continue. Now, eventually it will end, but I'm certainly suspect we will get to new highs, which I thought actually that we would get there on Friday, and we did not. But again, I thought we would get there on Friday because it was obviously very close. I believe the S&P was 3 points, and I think, and I don't really watch all this stuff that closely from these new highs, all that crap, because to me it really is meaningless to what I'm doing. I'm trading mechanically, so what do I care? But I believe I heard that some of the indexes did have all-time closing highs. They just haven't printed the all-time high yet. In the meantime, again, expect this kind of action to continue. Again, at least through the Fed. I mean, I don't know what the Fed's going to do. Are they going to cut? What's their program? What are the jobs numbers going to look like? But again, we would expect to see the grind higher continue. We are long. We're long everything now. We reversed the Russell on Friday. Okay. And again, it's not that I'm overly comfortable being long everything, but certainly I'm not going to fight it, as you know. So we'll see how it plays and where we go from here. But at the end of the day, expect the markets to make new highs. Do not try to outguess and outsmart and say that the top is in. Just remember this. You don't want to sell the top tick. You want to sell the after the market breaks hard for a couple of days. You want to sell the retracement rally. That will be the confirmation that a top is in. We have no confirmation that any such top has been here. Gold had a very interesting week last week with a big spike up Thursday, Friday, which actually looked like a blow-off. It did violate my first personal real level, which was 1,500, which was some concern. And on Friday, it actually broke out and got to almost 1,520, which was our secondary, but came all the way back down. So we're still short gold. And again, I think, we'll stay there. Now, it could change if we get another rally. But to me, the failure of the rally on Friday could have been the end of this short-term little spike. We're still short. We're staying short. And for all those that kept asking me why I didn't write commentary for Kitco, because I've been bearish, it has nothing to do with me being bearish. It has to do that I couldn't get to an internet. I was busy and I was on the road. So again, sorry, I couldn't help you, but I wasn't around to be able to do it. And, maybe sometimes, I get into other things. In the meantime, oil, starting to pop up a little bit. Now we're bearish, we're short, but we could see a change here again as well. You've found a bottom. You now saw a little bit of a rally, and you saw a potential breakout of a level on Friday again. Again, it was a fairly active day for oil. Are we going higher? Look, we're short, but again, I'm not as comfortable. I still believe that the 40s are coming, but I don't know that they're coming as fast as I thought they're going to come now, because we can see a spike rally before. So one of the things you remember always is don't fight what the markets are telling you. They used to call it, don't fight the tape. The tape is just the action of the markets and the price action, how it's going. Don't fight what the markets are doing. If you don't like the direction and you have an opinion in it, stay out until the direction changes, or at least it becomes more advantageous to you. Bond markets, they were a little bit lower, but kind of flat. It looks like possibly they found a bottom. They should, in all rights, be going lower if the Fed is going to cut rates. But they have kind of, they had some wild action, but at the end of the week, they were just kind of flat for the week. We remain short, and we will obviously remain so until our signals change there. The grain markets were I guess they were kind of lowish. They weren't bad. The action wasn't bad. They weren't great. They didn't break out to the upside, but they didn't break down. I think they're all kind of around some pretty solid support levels. And I think that they're going to be fine. I mean, we're long them all, first of all, but I'm also personally bullish some and think there's a lot of room, excuse me, to the upside. So I would expect, I'm not at all, I wrote about this, I'm not at all surprised by the pullback. I think you will see a much bigger rally coming. And we'll see if the levels hold. And we're all for it. And we're set up for it. And the meats, hogs did break down on Friday. Now, I think it's a very key thing. We'll see how the action is Monday. And we said, the cattle was very strong. Fats or live cattle broke out to new highs, and feeders are very strong and right up against some resistance. And before the report came out, there was cattle on feed report on Friday. We said that we expected the report to be neutral to bullish. And the report was pretty much neutral. So we'll see how the action is. But again, we're long. We look for much bigger and much higher moves here as well. And I think when you look at the dollar, it seems like the Fed has finally worn out the dollar and had broken it all the way down. Now, it did have a rally last week, but I would assume that rally was more of a dead cat bounce. We are short the dollar. And as you know, I like the dollar. I think it's going to par. But again, that is probably going to be delayed some. It can only take so much manipulation and so much pressure from the Federal Reserve that it just looks like it probably will sell off a little bit more unless it can hold this 97 level. But again, I don't know if it will or not. I'm short right now, so obviously I'd like to see it go lower. And again, if it changes, obviously I will reverse. I'm not going to worry about it. But so the scope of the general markets is just really a whole bunch of nothing. I mean, that is, when you look at the big picture, it's just quietly trading higher. Now, interesting enough, there was a trader, obviously not identified, but somebody who bought, I think, 65,000 calls in the VIX index. Right? And I'm not sure of the exact quantity, but it was a giant number, okay, that the markets will crash by April. Now, the first thing I will say is whoever that person was has lost their mind. So my guess is that it's probably something else that we're looking at, okay, not somebody who's really taking a shot that it's going to go, because there are so many better ways to buy volatility. And of course, when you have an index that's trading at 15, why would you buy the 65s? Okay, there's too many things that don't make sense, but I'm sure that will be in the news this week. And of course, those that are dying to get short will find a reason to go and short this market, which we continue to tell you is at this point, this market really isn't shortable. Okay. That is really what it comes down to, is that the markets are not really shortable. You get the lowest volume in 10 years. Okay. I mean, the lowest. You get the lowest volume in 10 years. So again, is it really prudent to get involved and get in front of a market that is dull, that is quiet, that has light volume? And the answer is absolutely not. Could you get lucky? Yeah, of course you could. But do you really want to bank yourself on luck? I don't think so. This is Bubba's Bottom Line, Todd Bubba Horowitz. We're going to step out here for a break. We'll be back with my commentary after the break. So everybody, yesterday we did a great hedging webinar. Could be our last. We're in debate on whether or not we're going to continue the program after this year. Now, again, those of you who have already been in and are lifetime members, you will always get the review 4 to 5 times a year, regardless of whether or not the program goes on. But again, I just want you to understand that if you're interested, you want to listen to that webinar, just email me at bub@bubbatrading.com. And don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line with me and, of course, my commentary. Welcome back to Bubba's Bottom Line, Todd Bubba Horowitz. And, every week I give you a couple of minutes of some of the things that are bothering me and some of the things that I think are out there. And of course, we've got this, we over the last couple of weeks, we've had this big string of brokers, saying they're going to zero commissions. Okay. Everybody's trying to compete with the Robinhoods of the world now and the Acorns of the world and all these free ones. And of course, free is not free. All right. The free is not necessarily free. There are a few things that go with it. First of all, options are not free. There's a charge. But again, I don't care about the minor charges that they are. I don't like the deceptive advertising that is being done. But again, that's fine. Again, it's all fine. Listen, you as the consumer should have the right, and you should do your own due diligence anyways. But here's where I see the problem. I think that they're all kind of going after the Robinhood, okay, which is, I believe, owned by somebody from Google or partner or financed. But let's explain what the brokers really want, okay? This is where most don't understand what the entire business is really about. And the business is about what? It's about the overnight float. Now, even though interest rates are at ridiculously low levels, okay, brokers still make money on your money overnight. Like a clock, it ticks every night. Ching, ching, ching. They're making money. So their goals are to get as much money on deposit as they can. Because in cash, sitting in your account is really sitting in their account as they accumulate interest that ticks each and every day. Tick, 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 tick. So this is what the battle is about. It's not about your commission business. It's about your dollars. Nothing wrong with that, but that is the industry in itself is built on, the big money is made on the more you have on deposit, the more you get. You basically make free money with no risk, no salary, no exposure. It just goes up every night because, again, there is an overnight lending rate. And of course, right now, I believe the weekly rate right now is about 1.6%. So figure that out and multiply that by billions and trillions, and you'll see why they're so intent on giving you free, which is not free, and why every other commercial you see now is for some sort of broker, advisor, or something. In the meantime, just a little bit of education. I don't really necessarily care for it, but I wanted to share that with everybody here, and I hope you all have a great weekend. This is Todd Bubba Horwitz, Bubba's Bottom Line, and of course we got football tonight. We've got who the hell we got? Who we got tonight? Is it Green Bay at Kansas City? Okay, I think that's who it is. I don't know. That's the game I had in mind anyways, but Green Bay, Patrick Mahomes is out. We'd like Kansas City to win the game straight up tonight, and we'll hopefully continue our winning ways. In the meantime, everybody have a great weekend. Thanks so much. We'll see you back here tomorrow with Bubba's Bottom Line. And if you're only in for Bubba's Daily Update, if you're only in for Bubba's Bottom Line, we'll see you next night. Have a great weekend, everybody. We'll see you later.